Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hi everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar presently displays a mixed bias, although improving risk sentiment and a softer US dollar has given a slightly upward step for the day's trading. Nevertheless, optimism improved though after President Trump announced the US blockade of Iran's vessels would be lifted, setting oil prices to a slightly better place than they have been over the last few weeks. Nevertheless, softer Australian inflation data, with the annual CPI easing to 4.2% from 4.6% and unemployment rising to 4.5%, has reduced expectations for further RBA tightening for now. Looking ahead, though, we've got the Australian GDP, the US ISM and PMIs, and also Friday's non-farm payrolls report, which will be the next major catalyst for any direction in terms of a broader move. But technically, the Australian dollar may still find good resistance around 72 to 72.5, and therefore could see a pullback towards this bottom side of the range, seen around 70.85, and reassess from there. Looking at the euro, the market's trading sideways, and no doubt will probably continue until we get a little bit more direction, that is, either from the non-farm payrolls or more talk of a potential ECB rate hike, which could be seen later this month. However, looking forward though, the technicals are mixed, and therefore we could still see a pullback towards the level around 115.65 or to the lows of 115, where I've outlined here, before the initial bullish move. Dollar yen still hovering around that key area, which was seen as a potential intervention area, which is close to 160. I still feel there is much risk coming in terms of any further gains, and we could see one of these candles wiping out this whole move that we've recently seen to the upside. Sterling, well, the market is a little bit mixed into the fourth bullish candle and still holding relatively well, and therefore looking towards that level around 134.80-85. Could even see a squeeze up to 135.45. Slightly driven from crosses, but nevertheless, I still feel the market is still lacking from the MACD to give me any bullish inspired moves further than 135.45 beyond. So we could see pullback. That is towards the level around 133 and reassess. Finishing with commodities, still holding above this recent break of the trend, retest, bounce, retest and bounce, and therefore could see the move up towards the area of 4,550 to 75, or even towards 4,600 and reassess. Any weakness likely to be short-lived. Oil picking up a little bit again, but nevertheless still holding above this key area around $84 a barrel, and looking maybe possibly onto 96 if this pattern improves. And that's a wrap. Thank you for joining me. As always, look at the internet report, and I hope you enjoyed a great start to the day.